All right, so we should be recording now. Talking a little bit about the SCORE Professional Women's Network. Sorry, I have a couple things going at the same time on my screen. Our purpose is we feel that women bring a unique perspective and face some unique challenges when it comes to being in business. And so the SCORE Professional Women's Network was created in response to that. Actually started during the pandemic, as we noticed and data showed that women and women of color especially were impacted more than others through the pandemic, so business owners of those types. So we want to strengthen and diversify and support our small business community. And when we say we holistically support women in small business, our programming includes both business skills, real specific skills like we're doing tonight. We also have sessions on sort of the softer side of business, or things like goal setting and visioning. We also want to support women in business as a community, so we do things like that through our Facebook page. Let me just go to our next slide here. Our target audience is people who are motivated and interested in creative from all areas of business. You don't have to be in business. You could be looking to start a business. And again, we're looking for both seeking practical information and support. And we feel that when women are successful in business, there is a natural ripple effect that goes through the community and strengthens our communities and our relationships. Now, I've talked a lot about women in business, and this is the SCORE Professional Women's Network, but our topics are open to everyone. And so I do want to make a special mention tonight that we have some men who have joined this session, and we are delighted to have them, and you are very welcome here. This programming tonight is business-centric. It is not necessarily woman-centric at all. So feel free to join in with Q&A or any comments as we go through. And speaking of which, there is a Q&A feature that you should see within your Zoom screen, and also a chat feature, which I will be monitoring as we go through the presentation. All right, let me introduce our speaker, Cyndi DeLong, and then we'll turn control of the presentation over to her. So we've talked about reducing anxiety by conquering financial planning. Many of our female clients or prospective clients have told us that when it comes to their business, they are very passionate maybe about their business idea, but most of us are not naturally financial experts. And so when it comes to trying to create a budget or think about getting a bank loan, some of us feel either lost a little bit or, quite frankly, intimidated. So our purpose of tonight's meeting is to give you some real good basic information that will ground you in this area and hopefully whet your appetite for more knowledge that you can get through SCORE mentors or other workshops. But we think this is going to be some great programming. And Cyndi DeLong, who is our presenter, as I said, she's a certified SCORE mentor. She's had over 30 years of diverse financial and administrative experience, with over 20 years in banking. Cyndi was also the former CFO of the American School in Mexico City, as she lived in Mexico for, I think, about 30 years. She was a native of Lancaster, and she is fluent, though, in Spanish. Now that after living in Mexico, I think it was maybe about 25 years, sorry, Cyndi has returned to Lancaster, and she is a full-time licensed realtor in addition to all of the other volunteer work she does. So Cyndi, with that, I will stop sharing my screen and let you share your screen and turn it over to you.
Okay. Perfect. Okay. Can we all see the screen there?
Yes.
Okay, very good. Well, thank you. Hi, everyone. Thank you for coming and welcome to the webinar on financial planning. For taking your time out, I know you have tons of webinars that you can come but for participating in this one, thank you so much. There is so much to talk about with financial planning, and tonight we're really only going to touch the tip of the iceberg. But I hope that tip of the iceberg maybe helps you move a little bit from the left side of the image over to the right side. The purpose tonight, and really my objective, is to give you concrete information or maybe concrete steps of what you can take to begin your financial planning status. But before we get to that, I am actually going to ask Linda to help me with a short survey. If it's an anonymous survey, just to kind of find out where our audience is in their financial planning status. So Linda, could you help me with that?
Yes, thanks, Cyndi. So we just launched poll questions that you can answer. There are 4 questions. The first one, and you can answer them, you should be able to answer all of them right now, but I'll just read them. So the first one is, do you have a written financial plan? And it could be a business plan that includes a financial portion. So yes or no to that. Do you have separate accounts to manage your business and personal funds? How often do you reconcile your business finances? And the last one is, what system do you use to manage your finances? And we'll just give everyone a minute or two to think about that. And we have some people joining us, so welcome to everyone who has joined us. Just wanted to remind you that we are recording this event tonight, so if you would not like to be part of the recording, please just mute your audio and turn off your video. Okay, it looks like we've stopped getting responses, so hopefully that means just about everybody has finished. Now I should be able to end this poll and share the results. Can you see that?
Yes.
Great.
Okay. Do you want to just go through that quick for me, Linda, because I don't see all of them down there. Just kind of let the audience know where we are at.
Great. So good news, most people have a written financial plan. So about, oh no, I'm sorry. It's the other way around. So people need this session. Only about 28% of our respondents say they have a written financial plan. The rest do not. That could be because you're still just starting to think about a business. Do you have separate accounts to manage your business and personal funds? 89% said yes, they do keep them separate, and about 11% said no. How often do you reconcile your business finances? The most popular choice at 40%, 39% was weekly. Close second is monthly. Quarterly is only 17%, and yearly is 11%. So we've got people that are paying good attention to their business finance reconciliation. And what system do you use to manage your finances? 6% said, I just stick things in a folder and I give the information to my tax preparer at the end of the year. Over half, 56% said, I keep a record on paper or in some kind of electronic spreadsheet like Excel or numbers. And 39% said they use a bookkeeping or accounting computer software system.
Okay,
Right.
that's great. I think they're very good. And these answers also help me a little bit to direct on what I want to cover tonight. So with that, let me turn into the agenda. Okay. Tonight, I'm going to actually break down the agenda into 3 major areas. 1, why create a business plan? And I think that is important since so many people do not have a business plan. Where do I start? And a little bit, if we have time, to go over the basics, the financial terminology, and a little bit of the basics. Those are the 3 broad areas of what I'm going to cover tonight. As Linda said, she is monitoring the chat. So please feel free to write down any questions that you might have along the way. She'll interrupt me if she thinks it makes sense at that time, or she might wait till the end if she thinks that I might be covered it in some future slides. Okay, does not want to go. Let's see here. Oh, there we go. Okay. 1, why create a business plan? You might think, oh, I have a great idea. I have a great location. I have some money in the bank. Isn't that enough? I'll be able to get where I want to get. Or you might say, oh, this is really just a hobby. I have a full-time job. I'm just going to work on this a little bit, see if it works a little bit in miniature, see if it's worth my while, and then I'm going to see if the business goes. A business plan is a blueprint to help you accomplish your goals. So it is really necessary. There was an entrepreneur, Brian Tracy, who's now turned a motivational speaker. And he says about goals, if you have a clear goal and a plan to achieve it, your focus is on a fixed set. If your focus is fixed on a set course of action, instead of becoming sidetracked by distractions and diversions, your time is focused on a straight line from start to finish. So one of the elements of a business plan is precisely goals. Next element is finance, and that's really where we're going to spend the majority of our time today talking about financial planning. And the last section that I include is time management. We're not going to spend any time with time management. However, from a business standpoint, it is important to understand time management, how you prioritize, organize, and systematize your time to get the most for your money to be able to move your business forward. The elements of a business plan is your business, and this was the first question, is it in writing? Because you might say, oh, I don't have a business plan, but I have something in my head. It's in my head. I say, if you have it in your head, it's an idea. It's not a business plan. It's kind of like the Don Quixote and his idea of going out and getting the windmills. It's a dream, and dreams don't necessarily become reality. So the first part of a business plan is you need to be sure that you put it in writing. And why put it in writing? Because it creates an objective to focus your energies. You're focused in that direction, just like that quote that was said. It's a lighthouse in the storm. I'll talk more about the lighthouse in the storm and where we go in further slides. But your goals that you need to do need to be short term, which helps you focus on getting started, and you'll take that to put with your finances. Midterm, because it keeps you going, and long-term goals give you hope. What are the top 10 mistakes with financial planning? And I'm happy to say that a lot of you are not doing this. Number 1 is you don't separate your business and your personal finances. Number 2 is you don't plan for your tax burden. So many people say, oh, I'm going to stick it in the end and I'll pay my taxes at the end. At the end of the year, your accountant or you do your taxes, and all of a sudden you have $6,000 or $10,000 to pay in taxes. And then it kind of is running because you don't feel like you have money. You have to pay your taxes and you're on that hamster wheel. Number 3, you don't have a budget or you're not sticking to one. And I would say for number 3, it's important not only to have a budget on your business side, but it's also important to have a budget on your professional side, because you need to understand what are your personal expenses, what are your fixed expenses that need to be paid month on month, and how are they getting paid? Because if you don't do that and you don't plan and have a cushion on your personal side, then your business side will always have to pay some of those emergency needs on your personal side. Number 4, you don't emphasize cash flow. Number 5, you overspend on inventory. Number 6, you don't pay yourself. Number 7, you spend too much at the beginning, and I would even add a caveat to that, or you spend on the wrong things at the beginning. Number 8 is you don't price correctly. 9, you don't think you need insurance. And number 10, back to, you don't have a business plan. What is the point of financial planning? The financial plan is where you put everything together. You put all your plans, your ideas, your research into a detailed model that talks about the money. It helps you determine the cost of starting your business. You understand what is necessary to stay in business without running out of money. We went back to the cost of starting your business. If you have your short-term goals and your midterm goals, you can understand from your short-term goals where you need to invest that money to be able to reach those short-term goals. A financial plan can help you anticipate problems and identify solutions. If you don't have anything written down, you can't go back and reflect and analyze and then look at solutions to those problems. It helps you calculate the price of your product or service. It helps you figure out all of the costs that go into your product and service and what you need to sell to cover your costs. It allows for tracking and helps you make corrections when things go wrong. It helps others understand your business, and it allows you to understand your business and help you meet your goals. Who uses this financial information? I'm sure you can think investors. Maybe you want to have family members that you want them to help invest in your business. Well, having something in writing and having a financial plan will give them more of a feeling that they're willing to lend you because they know how they're going to get paid back. Lenders, these are your banks, your nonprofit, even individuals who have to decide, is your business worth it? And can you pay back that loan? Vendors, if you have financial information, vendors can decide whether they can sell to you inventory on credit. Can they give you 60 days or 30 days to pay back what you're buying from them? Then you could take that inventory and transfer it over to your final product and maybe even get some of your cash back before you have to pay some of your inventory. Landlords, if you need to rent a spot, say you're opening up a bakery, the landlord is going to want to know if you have the money to pay for your rent. Mentors, people like us at SCORE want to have financial information to be able to help you understand what your business is and to help you achieve what your goals are. And finally, you need to understand how your business works in order to succeed.
Cyndi,
Yes.
if I could just interrupt for a question while you were talking on the previous slide about goal setting, we had a question. What are some examples of midterm and long-term goals?
It really depends on where you want to go. For example, let me talk about an antique business. I know someone who is into antiquing. So she goes around every weekend to purchase some inventory. And right now, her short-term goal was to be able to have a small little stand in one of these areas where you go and you can look at different antiques. However, her midterm goal is to open up on eBay to be able to take pictures of her items, to be able to sell and increase her inventory. And for her long-term goal, and she would love, is to be able to purchase a business or have a business somewhere and to be able to sell in a storefront. So for her, she was starting out little, She has a little space that is really only a cubicle going into a bigger area. And then a long-term goal is, how can I do that? And that would be increasing her sales. It really depends on your business, what you have. On a service side, it could be really different. Okay, perfect. This is financial plan. You're just like, okay, this is great. I knew this. This was easy. Where do I start? How do I start doing this? You might say, oh my gosh, all those spreadsheets. I have everything in spreadsheets right now, and that does not tell me anything. I can't do this. I don't understand figures. So where do I start? And you shouldn't. You did not get, I can bet 9 out of 10 of you did not get into business precisely to be doing all this finance stuff. That's not what you love about your business. You love making the cupcakes or doing your laser or painting. You know, you're the painter. You don't want to, you want to stick in the drawer all that finance stuff. And I don't want to price my paintings or all of the things I want to do. I just kind of want to leave that to someone else. So what do is you might stick your head as an ostrich into the ground and say, oh yeah, I'm not going to do that. I'm going to give you 4 concrete steps of what to start with. One, which it looks like over 80% of you have already done. You set up separate accounts. Why is this the first step? And a separate account does not necessarily mean it has to be in your business name. If you, for example, are a sole proprietor, you could have 2 accounts that are in your name, both under the name Cyndi DeLong. But if you have, for example, an LLC and you said to yourself, oh, I have a business, I have an LLC, and the reason I did that is so I have limited liability. Well, if you have accounts, you might have an LLC, but if you have accounts and both of your money is mixed, both from a business side and from a professional side, all in one account, let me tell you that LLC is kind of irrelevant and your liability is not limited. So that is your first step. You want to be sure that you have separate accounts. Even it does not necessarily have to be in the business's name if you don't have it set up. Second, make sure you understand your personal expenses and have a budget. I put this in because I think so many people say, I'm going to do it as a hobby. I'm not going to do it. But you need to understand your personal expenses. What are your fixed expenses? What are your needs that you need to have covered? And what are your wants? How are you going to cover those needs? I actually had a client recently, a cleaning business. She has 2 separate accounts, but her personal side went out, decided to purchase some other things, did not have a cushion, had a big issue explode in her house, did not have a financial cushion, and has now taken money out of the business to be able to cover that personal expense, but now her business is floundering. So you really need to understand that and separate and figure out how you will cover those personal expenses so it doesn't go into your business. Another thing is have a business-only credit card. Once again, even if you do not have a business name or they won't lend you to a business, make sure that you have 2 credit cards open in your name, one that you only use for business purposes and your other ones for personal. That way you can separate, and what really all of these things is doing is separating from your business from your professional side, your business from your personal side. The next thing is filling out a personal financial statement. I'm going to talk a little bit about that because this is your first step to also understanding you as an individual, what you have as your accounts, what are your assets, your liabilities, and your first step to potentially getting some financing in the future. A personal financial statement gives you a photo of a specific date and time. Say it's today, which is April 26th, or I guess we're on May 2nd. Sorry, a little bit out. May 2nd, what are your assets, your liabilities, and your net worth? Let me go back and talk a little bit. Assets are what you own. Liabilities are what you owe, and your net worth is your assets minus your liabilities, and that gives your net worth. One of the first things that a bank will request from you is your personal financial statement. Even if you want a bank loan, even if you want a loan for your business, they want to know personally how you are. Under your assets, you'll put your cash. You'll put any type of investments you have. They'll ask for your retirement account. If you have a retirement account, maybe you're working at another business. Your liabilities, if you your asset, you'll have a property, the home you live in. Say your property you think today is worth $400,000, that would go on the asset side, but you still own a mortgage, that will go on your liability side. And that personal financial statement is very important because it gives you a clear picture of how you are personally. However, it's important. Many people, I had one of my clients previously, he was all ready to go. And we looked back and we said, oh, well, where's your wife's information? And he said, well, no, I didn't include her. She's not in the business. She's not an LLC. It's only me. All banks, if you are married and if your LLC is only you individually, one person, they will request the personal financial statement also of your spouse. So that's important. It will be also, it's not just your information. They will request the spouse's information too. Finally, get your account set up in an accounting software. We'll talk a little bit. This is exactly where we want to go, to your accounting software and how are you going to do it. You're like, oh, this is exactly what I do not want to do. Okay. How do you do it? I'm going to talk a little bit about what the difference is between bookkeeping and accounting and when do you go to them. Before I start anything, you go to them initially from the get-go. This is one of those items that you include in your initial startup costs. And what is the difference between a bookkeeper and an accountant? A bookkeeper is someone who takes care of the day-to-day tasks of recording all of your financial transactions. It keeps you financially organized. A bookkeeper is not necessarily someone who has a accounting degree. They are not necessarily, actually, they are not certified public accountants. That's an accountant who has a 4-year degree, who's gone and taken a course. A bookkeeper, most of the times, has some type of business experience, and they might have certifications because different softwares allow you to get certifications as a bookkeeper. The accountant, on the other hand, takes all that information and gives you insight and analysis of that data. And they generate the reports, so then you can then use them to help you move your business forward. And they are very big on advising on tax matters. A bookkeeper will not advise you on a tax matter. So who do I help to help me set up the accounts? It's really a personal issue, and people will tell you sometimes, oh, and you need an accountant, oh, you need a bookkeeper. I would recommend that within your industry, go ask other people in the industry, who did they use? Ask your SCORE mentor. We have lists in SCORE, we have lists of accountants and bookkeepers, but I feel very comfortable that you can go with a bookkeeper to help you set up the accounts. And let me tell you, when do you go? You go before you choose an accounting software and before you've set something up. Researching to do this webinar, I actually met with different accountants and bookkeepers, and I said, well, give me one, besides the 10 mistakes, what do people, do incorrectly? And the one said to me, they decide, they choose the software, they set it up, and many times their account and the information, the way they set it up is incorrect. So I have to go back and spend the time, spend the money to help system. I'd much rather meet with someone up front, understand their business, and help them set up what is called a chart of accounts. And a chart of accounts is really just the categories that you are going to use where you put your day-to-day tasks of recording that, whether it's the mileage, whether it's, for example, if you're a beauty salon, all of the products for the beauty salon, your rent, They help you set all that up. You say, oh, I don't have the money all the time to pay for a bookkeeper every month. What I recommend is that you account for an initial consultation, help them set it up, and then you work with them so you can maybe put in the day-to-day tasks. Okay, what accounting systems? I really think that is a personal opinion. QuickBooks really got out into the market quickly, and everyone thinks, oh, I need to have QuickBooks. Not necessarily. I think you can step back. There's many banks that actually have free softwares that are available for accounting. There's many times QuickBooks is compared to a program called Mint that you could use. There's FreshBooks out there. There's small Stride. For example, I'm in the realty business. Many people use the app called Stride. There's Soho Books, there's FreshBooks. There's really a bunch of different options out there. So go to networking events. You can go to networking events, Lancaster Chamber, your different women's networks. Ask what they are using. What are the pros and cons? Ask your bookkeeper. I think your bookkeeper, the person who you're going to be doing the bookkeeping with, is probably your best source of information. And you can always reach out to SCORE to give you a list of different information too. Okay. So after we've decided that, we're going to start our accounting system. We're going to get someone to help us precisely to do that, because that's not what we love to do. What's next? I call this the gathering information stage. And this gathering information is going to help your bookkeeper and help you with your financial information. I've divided into 3 top areas that helps give you information from below. Required startup funds. Going back to those goals that we've set down that are short, medium, and long terms, those goals will help you determine how much money you really need. They will also help you determine what you really need to spend it on. I have different people that come to me as SCORE mentor. They come in and say, oh, I need to invest in a web page. And I say, okay, well, look back. How is that helping you with your goals or where you're at? Well, I don't know. I don't really know. I haven't thought about that, but I know everyone says I need a web page. I go back and say, let's look at your goals. We want to be sure that we are financially sound, because maybe you do need a web page, but maybe first you need to invest your money in an accounting system. Make sure that you have the structure, that your foundation is strong before you then go and build up that Tower of Pisa. Because if you build something, if you spend something and you don't have the initial money that you need and the funds you really need for your startup, you might not be successful in your business. Salary and wages. What is the first thing that I'm going to tell you that you need to put in salaries and wages? What are you going to pay yourself? You need to put something in. You need to put a line, and it might only be $100 a month. I don't know, but you need to put in something for yourself. What are you going to pay others? What type of employees are you going to have? Are you going to have employees, or are you going to have independent contractors? This is precisely another reason. If you gather the information, you start investigating, you understand all of the costs involved. A bookkeeper, if you're going to have employees, a bookkeeper is going to help you understand these differences. And if you're going to have employees, you might need to pay wages every week or every 2 weeks. For example, landscaping business. I have a client who is into landscaping. He has those on as employees. So obviously in the summer months, he has seasonal employees. He has more people that he's pulled in. He has to have someone help him. He has payroll that he has to pay every week in his case that he needs to generate. So he has a bookkeeper that helps him do that, because that information is very you need to be knowledgeable about Social Security, about Medicare, all of those things to be able to pay those wages and salaries carefully. That is another reason to use a bookkeeper. Fixed operating expenses. Fixed operating expenses are those expenses that you need to pay even if you don't have any sales. For example, it could be your insurance. It could be your rent. It could be that debt. You need to repay your debt. For example, your family member lent you $50,000, but he said, I need to be paid back $200 every month, even if you don't make any sales. It could be your utilities. It could be equipment. I have a client who bought a laser machine, is getting into the business of, has a laser machine to engrave different things. They have a loan out on that, and they have a fixed payment every month. So even if she does not sell anything, they need to pay that loan back on that piece of machinery. Then projected sales forecasts. Based upon your goals, what do you project your sales to be? How are you going to do your sales? You sit down, is it a monthly basis? A beauty salon, how many hairs are you going to cut each day? And what is the cost that's going involved in to cut that hair? Is it the material? Is it only the rent? How are we going to project the sales that we're going to do? And the difference between what of our expenses are fixed and are variable, we get what is called the gross profit forecast. And from there, you have your profit. I'll talk a little bit on future about your cash receipts and disbursements. Because not always your profit, does that always translate into the cash that you might have in the bank? You're saying, I'm showing $1,000 in profit, but I have zero cash in the bank. Okay. Now going on to a little bit, let's get into the basics and where we are. I said, okay, we've talked a little bit about how we gather the information. What are some of the basic information that we have? There's three in financial statements. If you're putting your information into the accounting system, these are the statements that your system can generate automatically. I'm not going to go into a lot of detail because this is precisely what I recommend if you want to sit down with your accountant, with your bookkeeper, or even with a score mentor to understand, but I'm going to go over in a big detail on these three. I'm going to first skip down over the balance sheet. The balance sheet is a snapshot of what your business owns and how it's paid for. Okay, there's accounts receivable, there's your inventory, there's your assets, again, that word, and there's your liabilities and your net worth. Your income statement shows if your business is profitable. And a cash flow statement, this is where I'm going to go into a little bit about your disbursements and that. Does your business generate cash? This is different from profit. Does it generate enough to pay the bills and continue going? These statements both show a historical and they can show a projected future of your business. Let's go on here and show you just briefly. I'm not going to go into all of the detail, but let's show you a little bit of the statements. Here on the balance sheet side, it's just a picture of a day. It can be, usually it's the end of the month when you input all of your information and say, hey, let me show and see how I am. On the left-hand side, always on the left-hand side are your assets. That's the cash that you have in your business. Your accounts receivable. What are your accounts receivable? It is the services or the products that you've already sold, but someone hasn't paid for. For example, maybe you do landscaping. Let's go back there. You mow every week the lawn on a big condominium complex, but they have agreed, they have given you, they have a contract with you. You might mow 4 times in 1 month, but they only pay at the end of the month. That would be an accounts receivable. Inventory, that is anything that appears that can be materially that you purchase. For example, a beauty salon, they might have the beauty products that they use to wash the hair. Supplies are many times any type of office supplies that you need. And prepaid expenses, say you decide you need a place where you have the beauty salon. If you've paid 6 months in advance, your landlord gives you a discount of 10%. So you say, oh yeah, I'm going to take that. So that would appear in your prepaid expenses. On the other side is anything that you need to pay for, your accounts payable. Say you bought that, your same beauty salon, they have, fortunately, you have bought all of this beauty product from a supplier. Well, they know that instead of paying for upfront, you've done a great business. They know over the month that you're going to use that product, you're going to sell it to your clients. So they're giving you 30 days. That would actually be reflected then as accounts payable. Your inventory is reflected under inventory, but you still need to pay it, and that's reflected on the liabilities. Below the liabilities section, there is the owner's equity. Have you put any money in the business? That is where that is reflected. Your loans from your family, your loans from banks, that's reflected underneath there, your owner's equity. And the difference between your assets and your liabilities, that is the net worth, and that is what is in the company. On the other side is your income statement that shows you your revenue, how much everything costs, takes your expenses, your total expenses, how much profit you have before taxes, and then your net profit. On the last side is the cash flow. Oops, did I take out the cash flow maybe? There's also a cash flow statement. The cash flow tells you really where you are putting all of the cash. For example, if you are a general contractor, you might have a contract that is worth $1 million. However, they do not give you any, they pay you in increments as you advance with the project. They pay you 30% as you advance with the project. Well, you need to invest in all of these materials so there's cash going outside the door and you're not receiving that in the future. And that's when that overlay of cash can, that you do not have enough cash, and that is why you can need cash. This was a lot of information. I went pretty quickly on what we were going to do. And really, this was supposed to just give you a little bit of an overview of what you need, how to do financial planning. And what I can really recommend is that, one, reach out to a SCORE mentor, have them help you set up and do a business plan, do a financial plan. I can't emphasize enough how much I really think that if you need to sit down, write your goals, translate those goals into finance, into money, and then you'll have your plan and how to set that up when you then set up your accounting system. So when you have your sales, and that doesn't matter if you're selling chocolate chip cookies, if you're selling widgets, or if you're even giving a service. Even if you're doing coaching, if you're a realtor like I am, if you are doing a cleaning business, if you're a service-oriented business, it does not matter if it's a hard project or if it's a service. Make sure you have your accounts set up. Look at them on a monthly basis. Many people question, well, how often do I have to put my information into the accounting system? And I think that really depends on your business. I talked to a person who had a beauty salon, and she says, I almost need to input that information daily because I'm cutting so much hair. If I don't do it at least weekly, I will have a chaos in my information. Whereas maybe if you are a general contractor and you have 1 or 2 big projects, you can wait maybe every 2 weeks or 3 weeks to update that information into your system. But I recommend that the sooner that you have your information, you keep it up to date on a day-to-day information, you can use that information to then guide you of where you want to go. Once again, I go back to that quote because you can focus on what you want to do and how you can move forward.
That's
Okay.
great. Cyndi, wanted to, if you're ready to start with some questions,
Yes.
and
Should
then,
I put the give it back to you?
well, you know what, if you, I think for the first question, if you want to stay on this slide,
Okay.
or even
Yep.
the other one that right before it, but either of those would be okay for this first question, because you talked about using a bookkeeper or an accountant and having your financial management system, your accounting computer software, and putting all of the information into the various categories. And then that system will generate from that same data that's input a balance sheet or an income statement or a cash flow statement. So all of that comes from the system, right?
Correct.
Okay, so then the question is, well, how do I know what goes into the categories that end up called, inventory on a balance sheet or cost of goods sold on an income statement? So, here I am just starting out. I know I need to go to a bookkeeper, but how do I know what those categories are, or how do I work with the bookkeeper on that?
That's precisely the information, and that's the bookkeeper helps you set up precisely those categories. They will explain to you based on your business what categories you need and what goes into those categories. That's why I think the biggest feedback that I got from the bookkeepers and the accountants was, come with me so I can talk through your business with you. I can help you set up those accounts, and I can explain precisely what should go into those accounts in case you want to keep managing that system. And then I can go back and look in a month or two to be sure that you're putting them in the categories that they need to be in.
Great, thank you.
Yeah.
Now, a slightly different turn. I have a great question here about business plans and financial projections. So the question is, okay, I've done all of what you've talked about today. I have a business plan and I'm finalizing my financial projection. Now, for the second and third year of my financial plan, when I'm doing those projections, do I go by a percentage increase for each yearly projection, or should I think about the projection in some other way?
Generally, you're going to go by a percentage. However, that being said, I think it's really based on your goals. I think if you are in year number one, I'm going to talk about, for example, a brewery. He's opened up a small little place. He knows that if I keep on this business, I can project, because I'm going to do this additional advertising, I can project across the board maybe a 5% increase because I'm going to do more promotion. People are going to hear about me. However, if I know in year three that I'm going to actually expand my business because I'm going to have income, then you might change it a bit. And then your sales would change because I know I'm going to get this business. Or for example, a general contractor. I've been working with a general contractor. That business would probably not increase over a percentage of sales. His first year, he says, I'm working with small little businesses. I have repeats. I know what's coming, but I'm trying to get a business. For example, I'm trying to get McDonald's. I know that if I fill out all of this government and I fill out all of this information that they need, I am going to get these two big projects. So I am going to then project that in year number two or year number three. So it really depends on what you're doing on your business, whether you project it on a percentage basis or because you know that you're doing something precisely in your business, then you would put that in the information.
Great, thank you.
Right. And that's when I would encourage, I did not talk in this slide any at all about financial projections. Because once you have your historical information, once you know where you want to go, there's many people that can help you precisely. Once you understand your categories, then do financial projections based on your historical information on what you're doing as a startup and what you're doing. For example, here in SCORE, we have all those finance spreadsheets. You don't need to develop them and do them on your own. There's people here and out within the industries that can help you do financial projections.
Great, thank you. Our next question says, you mentioned paying yourself. Should it be a regular amount set up to occur on a schedule? I have been just doing large owner withdrawals to my personal account whenever the business account is looking solid.
I would definitely recommend if you can take out something. I think that goes back again to what is your business. For example, a general contracting business, that might be after the end of the contracting, then I take out a percentage of that contract. However, if you are a bakery business and you have general income that's coming in steadily, then I would say then you project a monthly withdrawal that you're coming. I think that comes back to what's your goals on what you're doing it, and a little bit about what your business is. For example, like another one that I would say you take it out on a monthly or weekly basis, any type of like beauty salon or landscaping, something that is a reoccurring business, I would stress on taking it out in a methodical manner.
Yeah, I think this also is a great question because it ties back into what you said at the very beginning about you're going to have your business plan, but also what is your personal financial situation? Some SCORE clients have said they are in a situation where they're starting a business and they are going to stop working their regular job, but they have a spouse, fortunately, who has a solid job and a solid source of income. So they can go a little longer with starting their business without having to pay themselves. And this all gets back to what you were saying, Cyndi, about what is your personal financial situation? When are you going to need money? How much are you going to need? And how that has to map to your business plan.
Correct. And then what I'd also encourage, if you're doing that, then if you have the information, you are methodically and very specifically putting that money in the business. It's a reflective manner of putting that money in the business. It's not just leaving it there, but you've thought about that process and you know how much money you've put in the business and how much you've kept in the business. So that is why it's important, all of those financial statements, because then you can see how much equity you are putting in that business.
Yep. Another question that just popped up. How do you come up with a sales projection if it's a new business just starting out?
Through a lot of questions and a lot of research. It depends really what type of business it is. If it's a business, for example, I'll go back to a beauty salon. Let's go back and say you have a business, you're going out on your own in your beauty salon. Then you go back and you ask yourself, how many haircuts do I think I can do a day? How many colorings am I going to do today? And you start doing that information. If it's making cookies, how many batches of cookies am I going to do today? It really depends on your business. You sit down, depending on the time, we go back, all that time. What are you going to do? I know one of our mentors is a personal coach. She goes there and how many hours a day, what can I do as coaching in my day? What type of coaching am I going to do? Am I going to do trainings for corporate businesses or am I going to do one-on-one coachings? And you think precisely what you're going to do and you can put that in your information. Because that's where I go back again, Linda, to what your goal is. You might not, for example, I'll tell you, my goal, for example, in my realty business is to buy or sell 3 homes during a month. I might not reach my goal of 3 homes, but I have focused in my goals of 3 for this year. I have focused in my business plan of having 3 sales during the month, and I project what that will look at. Then precisely in my business plan, one of the things I said in financial projections, you can go back. Is it working? Did you meet your goals? Or if you didn't, identify your problems. What am I not doing if I'm not reaching my goals? What do I need to change? Do I need to then spend some money on Facebook advertising? Or do I need to reach out to people? That's
Yeah.
precisely where you start and put as forecast.
That's great. And we are lucky enough to have some other SCORE mentors on tonight. And one of our other mentors, he typed the message to everyone, but I'm just going to say it out loud too. He said, sometimes a way to make a first year sales projection is to figure out your costs, then extrapolate that into a sales objective to at least cover your expenses, not expensive, excuse me. So you at least that way, you know how much you may have to do in sales.
Perfect. Thanks.
And that then relates to another question or comment here about how much money a business owner should have in the bank to pay bills. Some SCORE mentors have a rule of thumb that says a client should have, or a business owner should have, roughly 3 to 6 months of funds to cover unexpected expenses or another COVID type event.
Correct. That is definitely what I recommend.
Okay. Another question. How would you adapt these strategies to a business that's already up and running?
Very simple. I'd go back. I'd first look at the mistakes that people are doing. I'd make sure that I have all the steps that you're already taking in place. Do you have your accounting system in place? And if you do, then I would reach out to a bookkeeper, because so many people say, well, I don't have time. I can't spend the money on a bookkeeper. I would say, remember, and we go back to that third aspect that I'm not really going to touch on, but your time management. Every time that you're spending on finance or other things that you don't like to do is time that you are not generating sales, or you're not investing in the forward approach. So I think you look at your business now. Where are you on different comments, different items that we discuss now? Take that. And if you have a bookkeeping system, ask your accountant or ask your bookkeeper, hey, generate these reports for me. Get me a balance sheet, get me an income statement, and sit down and try to begin to understand what they mean to you. What do they mean, and what can they tell me for the future to do my business? For example, you might look in there and see you have cash flow. I have someone who does antiquing, and she would look at her cash flow statement. This person who her husband says she has a little stand, but she has thousands of dollars in inventory that she doesn't have any money generating because she has all this inventory. How is she going to get that inventory out to reduce that money? So those statements, if you have a business going, can help you look at it, to read and to reflect on where you are and how can you make it more efficient, especially from a cash standpoint.
And that actually ties into another question that you've actually touched on, Cyndi, but I do want to at least ask the question, because there are different opinions on this, which is, so you do the initial consultation with a bookkeeper who gets you to understand how your sales and expenses, etc., should be recorded. They help you set up that initial chart of accounts. And then the question is, after that initial period of consultation, whether that's 1 meeting or 2 or 3, but you're kind of set up and running, is it just a matter of choice as to whether or not you need a bookkeeper after that initial consultation?
I say yes, with a star behind that. And why do I say yes? I would say that 99% of the people never got involved or never wanted to do a business because they say they wanted to manage all of the finance part. So if there is money that you can spend, I think it is a good plan to be able to get a bookkeeper, have someone on a monthly basis to be able to focus on that, so you can focus on what you love to do and how you want to, especially if you want to grow your business. If you want to grow your business and you want to take it to the next level, focus on doing that, doing what you want to love, being that entrepreneur, and let someone else focus on the finance and to provide you with information that you can then evaluate and use to grow your business to the next level.
Great, thank you. Our next question gets back to the sales projections. Again, this person is asking, if it's a brick and mortar retail store, how can you predict what the sales are going to be? Or going back to what we talked about before, is it a projection of what is needed to make the monthly bills?
It can be a combination of all of that, but you can do a lot of data research too on the number of other businesses in the area. For example, if you're in a Park City retail, how many people, you can look out to that area, how many people are flowing through that mall in a day. So if 1,000 people are flowing through, maybe 10% go in, and you can get information on that to be able to project your sales. There's obviously a reason on why you have chosen that area. So looking at that, using in information, maybe if you're in a borough, maybe you're here in the Lidditz area, for example, and you can look at the store owners there. What are coming through? What special events does the Lidditz borough put on for you as a business, and how many people are flowing through there? So using that information, gathering that information, because there's a reason why you chose that locale there. So based on that, then you project numbers on how you think you can flow through and what can be the projected item.
You know, one other thing I wanted to bring up to go along with what you're saying, Cyndi, is the Lancaster Public Library, specifically the Duke Street Business Center, is a great resource for people in business or people looking to go into business. And they have a lot of databases with information in them. And for example, there are databases that talk about different industries and what are sort of average margins. So, you know, that's another source. If you're looking to get into a certain type of business and you say, you know, how much money can I really make? It'll help you to understand, well, that's a business that has maybe a kind of a thin margin. So the cost of running that business is a little bit higher than another. And so we at SCORE, you know, often talk to people about using the Duke Street Business Center.
Yeah, thanks.
And one more, Cyndi, how do you find a bookkeeper?
I would recommend that you talk to other associates, friends that are in the business. I would, if you don't have that, reach out to networking events, Lancaster Chamber. There's women's networks that are around that you might be involved with that have a lot of information. For example, I'm involved in 𝗘𝗩𝗘𝗡𝗧, which is a women's network of over 200 women. And there's a lot of people in there that have different bookkeeping skills. I would recommend that you reach out to SCORE. SCORE, we have a list of different people that we can recommend those areas. Yeah, I don't hear you anymore, Linda.
Oh, I'm sorry about that. Thank you. So we'll just leave it open for maybe 1 or 2 more minutes. We've had some fantastic questions, so thank you to the audience for those questions. And after that, we will wrap up. So if you're still on the line with us, if you wouldn't mind just hanging on for just a few more minutes, we're running a little bit ahead of schedule, and so would like to get your feedback.
Okay, I stopped sharing.
Okay.
You can go back.
I will, thanks, Cyndi. I will bring my slides back up. And if you do still have a question, jump right in. No problem here. Just about there. Okay. My apologies here. Let me share my screen now. Okay, there we go. I think maybe we have one more question. Let me see. No, just a thank you. Yes, thank you, Cyndi, for that presentation. I hope it was useful for everyone. I know I learned things just listening to you as a mentor. So we really appreciate it.
Thanks.
Okay.
And make sure you check out SCORE.
Absolutely. So we just want to give you a quick preview of what might be coming up with our Professional Women's Network. So July 18th, we're going to have another virtual session similar in theme to the level of information and detail we just did with finance. But this is on marketing, and we're calling it Take the Mystery Out of Marketing. We hope you will join us for that. And we're really excited that in October, we are going to be having an in-person event. It's going to have information and a speaker, but also some great networking and ability to meet other people and do some of the sharing that Cyndi was talking about. And our theme for that is going to be on work-life balance. SCORE as an organization has a lot of other sessions, in person and webinars. And you can find that if you go to our SCORE website and you look at our workshop calendar. So we invite you to do that. There's a lot more programming for our clients and prospective clients. I'm sorry, one more question. Oh, this is just another thank you, right? That it's difficult to discern whether I'm spending enough time, bringing enough income. So this person is saying thank you to Cyndi. So yes, fantastic. All right. Now, there are ways you can get more involved with SCORE. We are always looking for new mentors for SCORE, and we have a vibrant mentor community. We also would invite any of you who are not members of our Professional Women's Network to join. And on the screen here, I have my information, but also I wanted to mention Beverly Duty, because Beverly is a fantastic mentor for SCORE. She is the co-chair for our DEI committee, and she is the chair of our SCORE Professional Women's Network. So we owe our gratitude to Beverly, who was the one that came up with the idea for this and has driven it. So we invite you to join us. You can talk to us directly, or you can join our Facebook group. We have a Professional Women's Network Facebook group where we talk about different business ideas and also promote our events. So we hope you can.
Linda, I just have to say, someone has just asked to join our network. So the marketing is working immediately. So that's fantastic news. Thank you. I will accept you into our Facebook group. And I also wanted to thank both Linda and Cyndi who put this together. They've put hours in, they've put a lot of practice in, they've tried to really hone the message. So I want to give a vote of thanks to you both. Really, really appreciate what you've done here. And we look forward to continuing the conversation with you ladies, but also the rest of the people that have joined us today. So thanks very much.
Thanks, Beverly. Thank you very much. All right, we also want to give a shout out to some of our great partners within the Lancaster community, because there are many sources of information and sometimes we can sort of build upon each other. So I'll just go through this quickly and then we're going to get to some quick feedback questions. So Assets is an organization that does training and consulting and lending. And they also have a specific women's business center. So we have clients, for example, that come to SCORE for mentoring, but they may take Assets has what they call their finance boot camp, which is a more intensive course over several weeks. So those things can be nice companion programs for each other. Of course, there's the Lancaster Chamber of Commerce. They have a Women in Business section and focus if you go to their website. Same thing with the Northern Lancaster Chamber of Commerce. Of course, there's also a Southern Lancaster Chamber of Commerce, and we may have guests here tonight from outside of our SCORE chapter. So we want to make sure we're mentioning like the Northern Lancaster Chamber or the Southern Lancaster Chamber. There's a Lebanon Valley Chamber. There's a lot of chambers, and that's a great source of information. We also want to just mention, these are not the only banks that help small businesses, but two of them that we know that have programs for small business is Ephrata National Bank and Fulton Bank. We also have the Community First Fund, which does financing and small business loans. And again, we want to give a shout out to other SCORE chapters that have either helped us with promoting this event. And again, if you're joining us from outside of our SCORE Lancaster-Lebanon region, there's the Bucks County chapter and the Susquehanna chapter, who are great partners as well.